1 million, 2 million, 3 million. One, two, one, two, one, two, one, two.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One, two, one, two. Good afternoon, everyone.
Hello.
Adrian, kurwa. I have to take profit quickly because the market looks like it's going to reverse, and yep, 900 pounds any day of the year.
I need 140 bucks, my friend, to be funded.
Only 120.
140.
How many days left?
No, this is no trading period at FTMO right now. They changed the rules, Thomas, and I'm in the verification now for 13 days. But in the last 3 trading days, I have no loss, but I have some kind like a blockade. You know, it's a little bit of fear, and
Yeah.
this is a little bit weird. And today in the morning, I missed the buy, and now I'm looking for $2 with one
Morning,
lot.
Thomas.
with one lot, you know.
Yeah, you will get it. Morning, Ricardo. Yeah, $140. It's like it's so freaking
Yes.
close.
Yes.
Don't rush, mate. Don't rush. You got
Yes.
plenty of time.
Yes. Thank you.
Plenty of time.
You're good, man.
Sleepy. Very sleepy. Don't know what's happening. The weather is suddenly again 28 degrees.
It's crazy.
It is. I'm good and bad. Good that today's profit was unbelievable. Like I made about 10-15% of my account. Like very, very good money. On the other hand, thank you. On the other hand, yeah, that's the reason why I closed the profits. Someone is asking that why I have the 0.1 lot, because I closed profit already. So this is just a runner. The other thing is that what's happening in Gaza is like, come on, man, that's ridiculous. It makes me sad because I know, actually, you guys know a few guys who are actually fighting on the field right now.
Yes.
Yoni, he's on the front line.
Uni's on the front line.
Yeah, he's on the front line. But we also have people from Middle East who involved. Some of them actually lost a family member So just I wish it would stop. I don't support any sides, but
I
this is
support
getting
only
ridiculous.
peace, Tamas. I support
Yeah,
only peace. I tell all the other peoples. I have a lot of Jewish friends, and also friends from the Middle East, and I tell everybody the same. I support peace. It's the same
exactly.
like the war in the Ukraine and with the Russians. I support peace.
Yeah,
It's fucked up. The whole situation in the world is completely weird, in my opinion, and this makes me sad. This is since COVID.
absolutely. And the worst part is that civilians are affected the
Yes,
most.
yes, yes.
Like, how on earth everyone expects them to defend themselves, like women and children? That's disgusting. But we can't do anything. But anyway, let's focus on the markets, guys, because we have a
Yes.
duty. We have a job to do. We need to make money. Despite the events and the happenings, we have to constantly deliver a return. Sadly, we're profiting off from war, but sometimes I don't have the stomach for this, especially when you have personal, someone on the field in the war. But this is what it is. So let's start the day with macroeconomics. Not much to say. Financial Times. So not much to say about macroeconomics because you know the situation. The market is currently driven by two very important things. Who can help me? Which are these two key storylines? Hello?
Yeah, one of them is the war.
War
Yes.
and yields, no?
War and yields, exactly.
Yes.
War and yields. What's happening with the yields?
I'm learning, Thomas. I'm learning.
Well done. So, sorry, I'm just looking for my headphone cable because apparently I need to put it on charger. Silly. I don't have that long cable. Oh, no. How am I gonna charge my thing? My thing in it, bruv. I lost the thing. Excuse me for a second. Sort out this huge mess. Oh my god. Can't find a thing in it.
Okay.
Okay, I try to switch. Just bear with me for a second. I try to switch to my other headphones. Can you hear me?
Yes.
Yes.
Can hear you.
Can you hear me now?
Yes.
Okay. I was able to switch from this to that. So, where was I? The two key events on the markets today, or the two storylines, the two major macroeconomic lines. One is obviously the war. The other thing is the yields. Yesterday, two of the Federal Reserve officials gave a statement, a speech, namely Neel Kashkari and Michael Bostic. What did they say? Who can help me out? I assume all of you are following the Fed officials, because you should do. Yields are driving the market and not trend lines. So Neel Kashkari yesterday, you can see it was at 9 o'clock Central European time. Neel Kashkari said or stated that it's possible that the recent rise in the longer term US Treasury yields means the US Central Bank need not raise interest rate as much as otherwise. What did he say about this, or what did he mean about this, is that obviously there are different maturity bonds, different yields in the US, and one of them is the 10-year. It's the long end of the yield curve. You have short end and you have long end. The long end is the longer the maturity is the long end. The shorter the maturity is the short end. And because the long end of the yield curve increased so much, now the yield curve is slowly normalizing. If you don't know what the yield curve is the differential between the long and the short end. So it's the subtraction of one from the other. And if the yield curve is in negative territory, that signals a recession. And you can see that how aggressively the yield curve started to reverse back from 0.1, from -1 back to -0.3. So it's still in a recessionary territory, but you can see that how aggressively it came back. Now, this means, or actually Neel Kashkari said that this means that the Fed doesn't have to increase interest rates, which could be a signal that the Fed is going to slow down, well, not slow down, but actually going to start pivoting and maybe cut the interest rate. And because of the war, something happened, or the probability that the Fed is going to cut interest rate came back into play. Now, few months or few weeks ago, or up until to date this year, there was not a single chance or probability that the Fed is going to cut interest rate, because the Fed was very clear about it, that they won't cut interest rate in 2023. But then the war came. And during war, obviously the supply chains are going to suffer again, oil is going to rise again, it's going to could create more inflation, but there are all sort of other effects which are going to affect our everyday life and also the markets. And the first time in 2023, there's a probability that the Fed is going to cut interest rate this year, which also helped gold to reach the current 1871, 1875 price level, 1874 price level, all the way from 1845. So once again, two stories that dominate the market, obviously the war and the speculation around the yields. Any questions so far?
No.
Okay, let's put some music on.
Yes.
The next thing we are going to do is look at the fundamentals to see if there's anything in the economic calendar that we can trade. And Bostic, by the way, is going to speak again today. It will be a Lagarde speech. Oh shit! I keep looking at Tuesday for some reason. It's Wednesday in it. So today we have in 36 minutes something called the PPI. Who can help me? What the fish is PPI? Should we focus on PPI?
Yes,
Yes, Thomas.
it's very important.
Hell yeah. PPI is another inflation indicator, similar to CPI. The only difference between CPI and PPI is that the CPI measures the consumer price index, so any change in the consumer and the change in goods and the price of goods and services, whereas the PPI measures the other end of the spectrum at the producer level. So PPI is in some way a leading inflation indicator, because if you look at the supply chain, you have the producers at the very beginning of the supply chain, then you have the wholesalers, the retailers, and at the end you have the consumer. So by the time the consumer receives the product, price has already gone up, but there's a way to catch inflation earlier at the producer level. Because if producers are selling their goods and services at a higher cost, you can imagine that the end consumer is also going to pay a higher price. So this is why PPI is a very important data, and probably the first meaningful data this week since the issue in Israel and Palestine started. This is the first meaningful data that is going to tell us a lot. So it's very important that today we focus on this one single data and see how the market is reacting. Because if the market reacts in a normal, old-fashioned way, that if the data is inflationary, then gold drops, then we have a chance to carry on with our daily trading and just focus on data despite the war. Could give us some hope. But if the market doesn't react the way I'm expecting or hoping, then I have some bad news, because that means that the major headline, the story, which is the Israel-Palestine conflict, that's going to dominate the market or drive the market until it's all normalized. Any questions so far? Did anyone fall asleep?
No, I have one question. What's the PPI number, Thomas? Is it higher or lower than expected?
Ooh, well, I don't know. I have forgot to text Powell. Maybe as some idea.
Inside info.
Yeah, we don't know what the data is, but we can analyze and we can prepare. Now, every single trader, every professional or semi-professional or seasoned trader are preparing for data releases such as the PPI. And I'm going to show you, it's going to be repetitive for you guys, team members. I'm going to show everyone else who doesn't know or maybe just joined how to do fundamental and macro analysis on gold. So the first thing that we need to do is find a meaningful data, which is going to be PPI today. Now, there are two different PPIs, core PPI and leading PPI or headline PPI. Core PPI excludes food and energy, therefore the standard deviation is much smaller than at the headline PPI. The forecast is set to be core level, slight increase on a year-on-year basis, but the headline is showing a decrease. Now, again, same mistake that PPI has 3 stars, whereas core PPI has only 1 star. But actually, as an economist and as a professional trader, core PPI is more meaningful for us economists and professional traders than the headline PPI for various reasons, which I'm not going to go into details. So, but of course, we need to keep an eye on the headline PPI, because if there's a massive difference, significantly big difference, for example, 100 basis point, so a whole percentage point, then of course the headline is going to take over and it's going to cast a shadow on the core PPI. Now, we have to look at it from the perspective of the central bank or the Federal Reserve, and this is the key part. If you have a meaningful data, which is an inflation gauge, such as the PPI, you have to view it, or you have to put your central banker hat on. If the PPI or the data shows inflationary trend or inflationary signs, that means that the Fed is most likely going to continue to increase interest rate. Well, let's put it this way, they're not going to cut interest rate and maybe increase interest rate if it's significantly greater. So from this perspective, if the data is inflationary, now, by the way, in which case the data is inflationary, if it's lower or higher?
Higher.
Exactly. Higher
Yes.
PPI, higher inflation, higher interest rate. That is the inflationary scenario. So if you have a chart, I have those colorful brackets. I like to visualize what I trade. I'm going to delete today's position because we already took profit. So it's mostly done. Should I take a picture of this? Maybe. Yeah. Okay, so now we can delete it. Oh, silly boy. So now we can delete it. Go on a higher time frame, for example, the 1 hour. We have very nice bullish market structure, of course, because of the war. And if you're focusing purely on the data, ignoring the war now, so omitting the data, omitting the war, ceteris paribus focusing only PPI. If we have a lower PPI, that means it's deflationary, so gold should continue higher. But if you have a higher PPI that is inflationary because it signals an overheating economy, right? Because PPI is a leading inflation indicator. In that scenario, gold is going to return to 1845 even. Maybe that's a bit too big of a stretch. But these are the two scenarios which we have to focus on. If you have a higher PPI, sell gold. If you have a lower PPI, then buy gold. Any questions?
All good so far.
Thank you, Tomasz.
You're welcome. I'm gonna switch back my headphone.
Thomas. Hi. Can you hear me?
1 2 1 2. Can you hear me?
Yes.
Excellent.
Yes.
Okay.
Thomas, quick question. If there's a higher PPI, why does gold dump?
So, in case of higher PPI, put your central banker hat on. A higher PPI means that the producers are selling their end product or service at a higher price. Now, if the producer is selling at a higher price, will the end consumer pay a higher price?
No. Okay, that's fine then. Because I was thought
yes.
if there's inflationary, dollar should get weaker, but it gets stronger.
No. You got it wrong. A higher PPI means that the producer is selling its goods and services at a higher price. So the end consumer is going to purchase at a higher price, right? That is inflationary. And if it's inflationary, then the Federal Reserve or the central bank is forced to keep interest rate at high. And that's why if you look at from an investor perspective or trader, if you can invest in US government bonds, which pay you 5% return or yield, you naturally or logically going to ditch gold because it doesn't pay any interest. That's the correlation, or that's why gold is dumping if inflation is high.
Okay. That's now I understand.
Yeah, it's worth to take a note or write down, all of this.
Yeah, I'm
because
writing it down now.
it's useful. And the dollar gets stronger in case of inflationary data because the dollar is immediately pricing in the probability that the Fed is going to increase interest rate. Because here's another important part. If the inflation is high or expected to increase, then the Fed is expected to increase interest rate. If the Fed is increasing interest rate, that means the yields on the bonds are going to increase. And if the yields on the bonds are increasing, the investors want that premium, that risk premium. They want that 6% or 5%, and therefore the demand for the US government bonds are going to increase. If the demand for government bond increasing, then the euro traders, the Japanese traders, and all around the world, they need to exchange their local currency to buy the US government bonds, which is denominated in dollar. That's why the dollar gets stronger.
All right. Now it's clear. Thank you.
Feel free to ask because it's a lot of information.
No problem.
Hi Thomas, good evening.
Hello, TD.
Hi. Yeah, I have one doubt, Thomas. Apart from investors and bankers, is this inflation is good for common people or common citizen in US because the rate will be go too high, but maybe the salaries are still as the same for a lot of employees. So is this inflation is good for the country, especially for the common citizens? Is this good for the inflation for the country?
It's freaking bad for these people. Imagine you get. Let's imagine where do you live?
I'm from India.
India. What is your average monthly salary?
It's come around 2,000 to 2,500 USD.
Okay, so let's say you take home $2,000. Let's say inflation next month is going to hit 10%. Woo, big number.
Okay.
So your salary most likely won't increase by the same amount. They're not going to suddenly increase 10%.
Yeah.
So everything you pay in the shop or the gas station or clothes or food have increased the price with 10%, but your salary stays the same. So your disposable income is gonna be less because you get less for your money. It's not good for you, innit?
Yeah.
Nafis is asking if actual data came out higher than forecast value but lower than previous value, will it be inflationary? We'll see. We have 24 minutes.
Hi, Thomas.
Hello, Arslan.
How are you doing, man?
I'm very good. How are you?
I'm also good. I have a question. The analysis you posted in Discord was saying that some Fed officials have given a statement that there will not be rate hikes, particularly in this year. So if the PPI is higher, it is inflationary. Are we still going to sell the gold despite all the statements from Fed officials?
Who's selling gold?
I mean, if data is inflationary. Sorry, deflationary.
Yeah.
If PPI is higher than expected, it means prices and inflation is going to increase, and there are possible rate hikes as well. So as per Fed officials, there is no chances of rate hike in this year.
Okay, with the wording you have to be careful because they said that they don't see any reason to continue holding high interest rate or increase interest rate. So it's a little bit different. But I also mentioned at the beginning of the Zoom or the stream is that today is going to be an important data. We don't know how the market is going to react because of the war, and this is the first day of the week since the war broke out in Gaza or Israel. And we want to see how the market is going to react. We want to see which narrative is going to be dominant. Is it going to be the safe haven, or is it going to be the fear of inflation? Or, as you mentioned, what the Fed officials said, that they don't, they think it's appropriate now to relax a little bit with the rate hikes. So we mostly observing today.
Yeah, thank you, Tom.
You're welcome.
Buenos días, Alphas. Buenos días.
¿Cómo estás, David G?
Muy bien, muy bien. Thank you, Thomas.
Super. Dragey is asking Thomas, that means if data is low today, meaning there's no inflation, Nasdaq and other stocks are going to jump. Well, we need to find. You need to wait. We need to observe the market today. So, I wish I could have all the answers for you guys and how the market is going to react. But this week is a little bit different. So, if you look at the trading view chart, I did the same kind of analysis as always with the macroeconomics. So in case of lower PPI, gold should increase, in theory, omitting the war and everything that's happening. So ceteris paribus, or a higher PPI. In case of higher PPI, gold should drop because it's inflationary. But this week is different because obviously we have the war and the invasion of the Gaza Strip. So I'm looking for answers as well. Today is pretty much observing the market, because today we have the first meaningful data set, which is going to be PPI. Now, PPI is a leading inflation indicator because it measures the change in prices of goods and services at a producer level, not the consumer. So it's not a CPI, it's a PPI. That's why it's a leading indicator. It's more meaningful than CPI. So in case of lower PPI, price, should increase to even 18, 90 is a bit too long. But anyway, without any speculation, this is what should happen in normal market conditions. But this week ain't normal market condition. This week we have a war going on, so just going to observe the market. It looks like that the gold is currently retracing back a little bit, so it will be interesting to see how the market is reacting. And we have 16 minutes. Those of you who would like to join the Alpha community and get daily morning briefings and live trade with me, have a look on the chat or below the video in the description. Posting. But that's enough. I had talked enough. What do you think, guys, is going to happen today?
Maybe deflationary data.
I think it's going to be inflationary.
I think data will be inflationary. The price will go down, but it will soon retrace and go back up. So that's bullish.
The first thing you need to invest in is a microphone with the profit you make.
So this is my phone problem. That's my problem.
Yeah. Youssef has a very good question. Do you think the market will ignore the war and go with the news? I don't know.
No.
That's what we're trying to figure out today, because today is the first meaningful data, which is PPI. I don't know.
I think gold will fooling everybody, because every trader, every retail trader is waiting to filling the gap. Everybody is waiting for the big sell to filling the gap, and gold going up, guys. Mark my words.
Yeah,
That's my view. That's my view.
There's gap fills. Those are dangerous.
Yes, yes. With the count gold county. No.
Danny Sireri sell the news by the fact. We'll see.
I will say the opposite. Sell the news by the fact.
We'll see. Fatima Alam Thomas, what's the difference between premium and pro plan? If you go for the premium, I take you out for dinner, personally.
Okay. I go for the pro.
Oh, fuck you.
Expensive dinner, brother. Expensive.
Wine, dine, and 69.
Oh, baby. Oh.
Dragey says to you, Adrian, that gold is ignore the gap. The way gold ignore the gap is manipulation. So true.
Sorry?
Someone says on YouTube that the way gold ignore that gap is manipulation. No, I mean, necessarily not every gap is... Well, every gap is going to be filled in sooner or later. But, you know,
Yeah.
sometimes it takes an hour. Sometimes it can take weeks. We've seen it before. It's the question is, when is it going to fill? And don't get fixated on the gap, because if you get fixated on a gap, imagine how many people were trying to sell gold. And if you look at the chart, I go to the 4-hour chart, how many people were actually trying to sell since that gap appeared? So from this price level right here, 1851, how many sellers got trapped in? Boom, price went higher. How many people were selling right here? Went lower, boom, again. So don't get fooled, but just because there is a gap.
Exactly my view, Thomas. Exactly.
What I would do, you zoom enough into the chart so you don't see that fucking gap.
Yeah.
Well, I feel like the gap was created because when the market opened with the war, like news about the war was released prior to it, and I feel like it's unlikely for it to be filled in the short term because of the circumstances.
Yeah, exactly. I mean, there are way bigger forces out there. For example, anxiety and fear, and what's happening in Palestine. And the market is not going to focus on a silly gap. They're going to focus on what's happening in the real world. I mean, don't forget that gold is a safe haven asset. So during market turmoil, geopolitical turmoil, gold, Japanese yen, Swiss franc are going to be always sought after.
Yeah.
Thomas, these people generate trading ideas from the chart. They fail to realize markets are moved by real-life event. No one in hedge fund investment banks is using technical analysis. I do agree and not agree. So, yes, the market is moved by finance and economics and politics. I wouldn't say not people in hedge funds, investment banks don't use technical analysis. They do use it. I mean, there's a reason why they use it. It gives you a good confirmation and also an entry, because it's also important that, especially if you trade on a leverage market, it's important that you enter at the right time, at the right point. If you buy cash equities, no one cares where you enter, because you hold the equity. You not trade on leverage.
Thomas, if I may add, how are you? How are you doing?
Ivan, I'm good. Good to hear you.
If I may add on the last question is, Google guys like Linda Rushke, she